Tuesday, 10 of October, year of our Lord 2023. I'm Jim Munchback, certified financial planner and professor of personal finance at the University of Houston. We're getting ready to start our next lecture, uh, and today we're going to talk about insurance. So I'm going to jump on over to Zoom and get my screens all ready. Welcome if you're watching on YouTube, Facebook. If you're a student in the course, please be sure to leave a comment. Let me know you're watching, listening. Uh, and here we go with the Zoom. I need one more screen. That's what I need, one more screen. If you could see, sometimes I do tutorials and I show everything that's on my screen, and it's kind of crazy. And only on days like today is it too challenging. So I have to get out of my Bayrock Zoom and get into my U of H Zoom. Should have done that before, yes. Then I wouldn't be doing it now. So if you're watching on YouTube or Facebook, oh, great. Here's the fun part. I just got my verification code. I have to grab that. Here we go. Got the Zoom code. You know how it is with technology. It's good. It's fun. It is sometimes challenging. Okay, so we got the Zoom meeting going. Now I've got to get the Zoom set up. Again, this should have all been done before, but it's not. Now it is. Okay, I think we're good to go. Okay, let's jump into participants. Okay, welcome aboard, Zoom folks. Welcome to the Zoom room. Hey, Ava, Cedra, Alani, good to have you here this morning. If you could, please chat in and let me know. Hey, I guess you can hear me, Ava, because you said good morning. Thank you very much. I hope you guys are having a great day. I hope you had a great week. I hope you, like me, are enjoying the awesome weather. It's been just amazing. You can hear me. I'm just going to assume you can hear me. So very good. I am still trying to get my screen set up so that I need help. I need a technical assistant. Only on Tuesday, only when I teach. My studio it's great, but it's just not set up. Yes, Ava, the weather has been so nice. I was so tired of the heat. I'm at my house right now in Friendswood, but my wife, her bucket list was to have to be a volunteer park host at the Stephen F. Austin State Park. So that's where we live. We have a nice RV out there, and I'm going to show you some. I think I can show you some. Well, maybe not. Let's see. I think I'm in my iPad right now. So if I go here, and I go here, and I go here. So that's where I live. Well, for now, we've been living there since July. We started out in January. My wife's bucket list was to be a volunteer park host at a Texas state park. We love to camp, and so that's what we've been doing for this summer. And we started in January, so it's pretty cool. And every morning when I get up, the first thing I do is walk, usually somewhere, and I'm seeing so many beautiful things: birds, deer, armadillos, snakes. But anyway, it's a fun place to live. That's my wife's bucket list. The problem is we started in July. So Ava, imagine we had a couple of days that were 108 degrees. It may have gotten up higher than that, but I remember 2 different Sundays that it was 108 degrees. So, yeah. that was fun. So, if I haven't shown you my wife, there's my wife, Connie. She's the love of my life, and she is the person who wanted to be a park host. She is retired, and I'm not retired, so I get to do what I do, and I'm happy about that. Okay, let's get started. It is time. I'm going to say goodbye to Connie. Bye, Connie. She's gone. Now I'm going to get back to uh, where we are. Put the iPad back up. Today we're going to talk about Insurance 101. You guys did a great job on bargaining and negotiating. I hope you learned some things. It never ceases to amaze me how popular Ramit Sethi, his video on negotiating your salary, your job. It's a great video, lots of good content. But remember, the point of that whole assignment, the whole week of bargaining and negotiating, is for you to recognize the lifetime value for you in terms of your net worth, building your wealth and your net worth. If you disregard the skills related to bargaining and negotiating and you just decide it's not for you, it's going to cost you a lot. And how much it's going to cost you, I don't can't really say for sure. I just know a lot of people who have no problem bargaining and negotiating pretty much everything. And those folks they move the needle in a significant way in their personal financial matters. And so my encouragement to you and the whole purpose for that assignment was to help you try to recognize that bargaining and negotiating and the skills related to bargaining and negotiating are something you really should put on your skills inventory. And if you're good at it, keep doing it, keep sharpening those skills. And if you're not good at it, if you've been avoiding it, then by all means, I hope you'll take advantage of the opportunity you were given last week to think about and engage in a whole new level of bargaining and negotiating. At least don't avoid it. At least learn a few of the basic skills. One of my favorite uh, bargaining and negotiating skills is silence. Dave Ramsey, I told you last week a little story about Dave Ramsey. I taught his material for many, many, many years. And Dave got so excited every time he talked about bargaining and negotiating. And he would talk about cash, the power of cash, which, in my opinion, isn't quite as relevant today as it was back when Dave was doing those videos. Because if you take cash into a Best Buy, most likely they're going to look at you like, okay, no, that's not going to get you a discount. If you've got a credit card, they're probably more likely to give you a discount if you sign up for their credit card, which Dave Ramsey is absolutely opposed to. And thank you, by the way, for all of you who contributed your comments and your discussion and your collaboration around the whole idea of Dave Ramsey's approach to cutting up credit cards and eliminating credit cards. And there's kind of two sides to that story. And I think most of us agree, at least I feel like I agree with most of your comments, that yes, credit cards can be a very helpful tool. They can be a resource. They can help you manage money in a more efficient way. And so I think Dave Ramsey's marketing of cutting up credit cards is pretty much marketing. But it doesn't mean that there isn't a huge risk, a huge problem with credit cards. And that's why we did the Credit Crush assignment, part 1 and part 2. And you guys have done a great job on that. And I hope it's been helpful. I hope you're starting to see that credit is a product, it's not a privilege. And so, anyway, that whole deal with the conversation we had about Dave Ramsey and credit cards and all of that was helpful. So, I think I just got off track. I was talking about bargaining and negotiating and how Dave Ramsey gets so excited about bargaining and negotiating and how cash is one of his big ideas, that if you carry around buckets of cash and briefcase full of cash, you're going to be an awesome negotiator. And I don't think that's actually true. But one thing I do think is true is silence is golden. And Dave Ramsey said, he taught, he teaches, if you just learn to say, that's not good enough. That's one of Dave Ramsey. I'm sure it came from lots of other folks who are good at negotiating, but that was one of the things I always appreciated about Dave. And it's something very simple for you to learn and apply in your bargaining and negotiating. So if you're in the middle of negotiating for a car, for example, you can just say those words. That's just not good enough. And then here's my tip for bargaining and negotiating is silence is golden. And so I would say that that's one of the things that I suggest. I think I have my 7 here. Yeah, those are my 7 rules for bargaining and negotiating. And those are just kind of my tips. They're kind of my top 7. There's a whole lot more, and I hope you are making a list and practicing them. But so the first one is, remember last week we divided the room into 2 sides. Those of us on this side of the room, the right side of the room, the correct side of the room, we bargain and negotiate everything. And then there's the other side of the room. Maybe you're on the other side of the room where my wife Connie is, where she just doesn't feel comfortable bargaining and negotiating, so sometimes she avoids it and she can really miss out on a deal. So those of you on that side of the room, the whole question was, how much would it move the needle if you learned to bargain and negotiate? And the idea was, those of us on the right side of the room, we kind of feel like you can bargain and negotiate everything. Everything is negotiable. That's obviously not completely 100% true. There are some things you can't negotiate, but yet it's hard to find. When you have a conversation, you can discover that many people will bargain and negotiate a lot of things that you may think are not negotiable. So that's the whole idea, is just your mindset. If you are afraid of bargaining and negotiating, you're going to avoid it. But if you have the idea that everything is negotiable, you're going to be much more likely to be in the process of bargaining and negotiating, and that's going to make a huge difference in your life. And that was number 1 for me. The walk away muscle is huge. If you are not able to walk away from a deal because you're too in love with that red car, they're gonna know in the negotiation that you are a sucker and you're not going to get a good deal. So you have to learn to walk away and have the ability. It's an emotional strength, it's a discipline, and it's a very valuable discipline in your life when it comes to buying something that you really want or need, but being in a position where you really feel like you have to have it. That is a bad way to bargain and negotiate. So you have to practice developing your walkaway muscle, and that goes really hand in hand with the daily discipline of patience. Patience is key in so many things in life, and it's something that we have to develop. It's a muscle, a discipline. So that's number 3 on my list. And then comparison shopping. And that builds 3 kinds of muscle. One of them is patience and diligence. And it's just, research is not something I love to do. Usually when I want something, I just want to buy it. I could tell you I could tell you a story about the RV that we're living in right now out at Stephen F. Austin State Park. We weren't sure exactly when we started park hosting. We weren't sure what we wanted. I knew some things I needed. I needed an office in my RV. My wife didn't really want or need. Oh my goodness, Alani, I think. I'm looking at the notes, and boom, side note. It's not a side note. It's a main note. Thank you, Alani. You just won 10 extra points, and you can ask for those anytime you want, whenever you need them. Just let me know that on this date, at this time, it's 10:15 a.m. on 10 October, year of our Lord 2023, and Alani asked the question, what is our class collaboration for this week? And as you know, this is a new component of personal finance for this course where you get to ask that question and remind me to talk about this week's class collaboration, which I will do as soon as I finish reviewing my top 7 negotiating tips. But thank you, Alani. You win that. And by the way, um, yeah, I've been reading all of your comments related to the requirement to attend a Zoom meeting in an asynchronous course. And I think there may still be a little confusion. And so I want to talk about that a little bit today too, if we have time. So thank you, Alani. So back to the tips. I already talked about cash is king. Comparison shopping, it's something that if you do it, you're going to find a better deal. You're always going to find a better deal. And that's what we did when we bought this RV that we're living in right now. I have an RV in my driveway that I can't sell. It's a motorhome, but it wasn't big enough. For me, it was not quite big enough. It didn't have an office. So I'm working. I'm not retired. I'm working, and my wife's in the kitchen, and I'm in basically the living room. The kitchen's the same room. And that was just not going to work for me. So we made a deal that if we liked park hosting, and if it worked out, as soon as we got our next assignment, and we knew we were going to do it again, that was my ticket to buy. And I love to buy stuff, so that was good for me. So we committed to come back in July. And when we committed to come back in July, I decided it's time to buy. So it was like February that we got the invitation to come back in July, but I didn't want to wait until July. I went ahead and bought an RV, but we went to the RV show in Houston, and I almost succumbed. I found exactly what I wanted at the RV show. And RV shows are a good place to buy an RV. But I'm going to talk about timing. Timing is everything in negotiating and bargaining. And if I would have been patient, more patient. So I did not buy the RV at the show, but I found like every time I found one that I loved that had an office, had everything I wanted. And then I went down, just walked a little couple rows down, and I found a very similar RV for less. And then I found another one for even less. So I was just asking questions, and they were coming back with different offers, and the offers kept getting lower and lower to the point where I almost said, okay. But the problem was my wife and I made a deal. We promised one another that no matter what happened, we would not buy an RV at the RV show, because my wife knows that I would have been the guy who would have been like, oh, we have to have that RV. But because I promised, and we didn't really get in a fight, but we had one of those tense moments, that sometimes spouses are wont to do, where spouse A is going to stick with the plan and spouse B is going to try to negotiate what he wants, which is what I was trying to do at the RV show. But anyway, we left the RV show knowing exactly what we wanted. We agreed this is the RV that we really want. So my wife went on Craigslist, and we both did actually, and we shopped around, and we found exactly what we wanted for literally less than half the price that we would have paid at the RV show, with several upgrades that we would not have gotten if we bought it new at the RV show. So all that to say, that waiting, patience, was helpful. But here's the timing part. Okay, I have an RV, a beautiful motorhome sitting in my driveway, like 10 feet from where I am right here. And that RV, as nice as it is, I've lowered the price on it 3 times, maybe 4 times, trying to sell it, because we bought that other one. And so I just figured I would go ahead and sell this one myself. And I haven't had one person look at it. Now, the reason I'm saying that this is related to bargaining and negotiating and timing, if you were in the market for an RV, a recreational vehicle, and if you tried to buy it after COVID, when everybody and their dog wanted to get an RV, you're going to pay a huge price for it. However, if you recognize that the way the market works in anything, there are times when the prices are ridiculously high, and from there the prices are likely to go ridiculously low. And that's exactly what happened with RVs. It's happening on homes right now in reverse. So if you're looking to buy a house, this may not be the best time to buy a house because real estate values have gone up so much, but they're starting to come down. But the RV market is having historic sales, which is why I'll probably have 2 RVs for a while, which ain't great, but I'm not selling it. We like it. We're going to keep this one instead of giving it away. So anyway, that's just one of my tips, is that timing matters. If you're going to buy a car, I don't know if you know this, but if you buy a car, a used car, on the last day of the month, you will get a really special deal because the dealers want to get it off their lot. If you buy a car, a used car, at the end of the year or the end of the quarter, each of the end of, you name it, the month, the quarter, the year, they reduce the price because they don't want to pay for that inventory. The same thing is true with RVs. Imagine if you own a 100-acre lot and you have RVs all over your lot, and you're ordering new RVs from the manufacturers because your customers want to buy that 1 or 2 or 3 different units that are just like selling like hotcakes. So you want to buy those and put them on your lot. But what about all of those 2022 RVs that are still sitting there? As a dealer, you're having to pay a fee, an interest. You have a loan. Basically, they floated you that inventory, and you have to pay like the interest on a loan to keep that on your lot. So what you're going to do as a dealer is you're going to do anything you have to do to discount the price of those 2022 models that you have on your lot, and you're going to sell them at whatever price you can to get them off your inventory. So it's just as you think about being a consumer and having things you need to buy, just know that timing matters, and just be aware of that, especially on big ticket items. So that's my 10 cents worth. I hope that's helpful, but mainly you guys did a great job just discovering and learning, and I hope you keep doing that. That was kind of the summary of bargaining and negotiating. So, okay, let's talk a little bit before I forget, Alani. I want to say it is 10:22, so I'm going to go ahead and talk about this week's class collaboration. So, what I'm curious about, this is this week's class collaboration. Maybe you're watching on YouTube, and maybe it's 2 o'clock in the morning on Saturday, or maybe you're on Facebook, or maybe you're here in the Zoom room. I hope you're here in the Zoom room. I appreciate you being here in the Zoom room, but I want to make very clear, this is an asynchronous course, and you do not have to be here now, but you are required to watch the Zoom meeting. So my question is, what I want you to talk to me about and help me understand is this course, Money Study Group, Personal Finance, my course at the University of Houston. How do you feel about your ability to access these? This is a live stream. It's going on Facebook and YouTube right now, and you have a playlist for this video. It's not in that playlist until after we finish. That's like the next thing I'll do. But my question is, what I want you to talk about, what I want your class collaboration screenshot to be about is a comment or two telling me, how do you feel about the way we do that? Do you like it? Is it easy or is it difficult? Is it clear or is it confusing where you go to get the video for this live stream? Because I'm still puzzled that so many students are turning in assignments without that one screenshot. And I made it clear a couple weeks ago, there'll be a 10-point deduction if you don't comment on this week's class collaboration, simply because there are a good number of students who are not even watching the Zoom meeting, and then they're asking all these questions that, frankly, I don't feel like you have the right as a student to expect me to answer questions in an email over and over and over when I'm answering them in the Zoom meeting, which is required. So I just want you to kind of help me. If there's something I can do differently, if there's something I can do to make it easier for you and better for you, I will do whatever I can do. And so what we've done at this point is made these live streams go to a YouTube playlist so that it's super easy for you to have a link to that playlist and jump into that playlist and see the most recent video. And you can watch it on YouTube at double speed, which is exactly what I would do if I were you. I would probably not show up. I would maybe show up to the Zoom meetings just because I hope it might be fun. And if you're Alani or Ava or Christina or whoever in the past has been there first with the question, what's this week's Zoom collaboration meeting? You get an extra 10 points and a hooray. By the way, I was going to do this. I was going to. Yeah. Okay, so that was me having fun. Let's talk about insurance. So I am going to, any questions, let me jump into I don't see any questions in the chat. If you have a question and you're on the Zoom meeting room here now, be sure to ask and I'll be looking at the chat. Otherwise, I'm going to jump in. It's 10:26. I'm going to tell you that insurance is, we're going to spend this week and a little bit of next week on insurance. And insurance is a big topic. And when I say a big topic, I mean there's a lot of information about insurance. And you're going to find a ton of insurance in Money Study Group, resources to help you understand the coverages. And I want you to understand those coverages. On the other hand, I don't want you to feel pressured like you have to become an expert on insurance. This week's assignment is really very, very simple. I don't know if it's very, very simple. It's easy. It's not hard. It won't take you very long to do, and I'm going to walk you through how to do this week's assignment to make it as easy as possible. But I want you to learn the coverages. I want you to start to think about the purpose of each individual insurance policy. And then I want you to be able to think beyond just the policy, like if it's a car insurance policy or a home insurance policy or a health insurance policy or a business policy or a life insurance policy or a disability insurance policy. There's all these different policies. One that you probably haven't thought of is called a personal liability umbrella policy. And then there's another policy called a commercial liability umbrella policy. And all of these different policies have a specific purpose. But within that purpose, there is different coverages. Like for a car insurance policy, there's lots of coverages. And so this week, in this week's assignment, you are going to do a car insurance quote. You're going to get a quote on a car insurance policy. And I would encourage you to think about that car, the pretend car that you bought. I would encourage you to use that car as the car that you get the insurance quote on. The way to get the quote, now, car insurance is just one piece of your insurance portfolio. And you're not going to be an expert. I promise you won't be. Well, you might be. You could be. You may become an expert. I'm afraid, though, that I'm an expert on insurance, which is very disappointing to think. There is one thing I could say I'm an expert on, and it's insurance. It's a pretty disappointing statement for your life. But I do have lots of letters after my name, and I've spent lots of time in the insurance industry, and I am an expert. And so I will tell you that you probably won't become an expert this week, no matter how well I do at achieving my goal of teaching you how to become a good consumer of insurance. That's my goal. I want to help you move along to become a good consumer of insurance, because you're going to spend a lot of money in your lifetime on insurance. Imagine, you may not even have a clue, You will have a little bit more of a clue at the end of this week's assignment, because you're going to get a quote for car insurance, and you're going to get a quote, hopefully, on the car that you purchased, your imaginary pretend dream car. And by getting that quote, you're going to understand the coverages better, and you're going to see how much it costs. And in addition to that, you're going to get to see how some of your choices relative to that car insurance policy will influence the price. And so that's my goal, is I want you to become a more effective consumer of insurance. And the way to do that is to understand the coverages, what they do, how they protect you, how much they cost, what are the options that you can choose to make the cost higher or lower, to give yourself more protection or less protection. And we're going to talk a little bit about that. But mostly, you're going to do some homework that's going to help you have to think through the coverages, the deductibles. And so let's start with, and then you're going to actually go into your financial plan, and you're going to add a data card to provide insurance, excuse me, insurance for each of those, well, for your home and for your car. And you're going to have a data card, and that's part of your assignment. So we'll go over that as well. But let me scroll down first and just say, I'm going to just show you the screenshot. So this is a screenshot for your car insurance. The way you do this is you go to Profile, Net Worth, Add Account. You're going to add insurance, and you're going to see this data card. And you're going to add the insurance, and this is what I'm looking for. I'm looking for, I want to know what put the name of your car. So if you bought a Lexus, put that. Now, listen, if you actually have car insurance and you want to use your own car, that's totally cool. But if you don't have a car and you're actually, you're welcome to use the pretend car. It's up to you. I don't really care. I just do want you to, I want you to get a sense of how much it costs, and I want you to have a good comfort zone in what you get in your car insurance policy. Most of you should be able to do this assignment. Most of you should be able to get a car insurance quote. If you can't get it for yourself, let's say you don't have a driver's license, I would encourage you to get it for a roommate or a friend, family member. You just get a quote for car insurance so that you can go through the different options. Most of you should be able to get it. I would start, this is a big suggestion. I would start, if you have car insurance, if you're driving if you're on your mom and dad's plan, whatever, I would go to your current insurance company to get the quote. I would encourage you to avoid going online and Googling insurance quote. If you do that, it's fine, but you're going to be on like 1,000 different agents lists, and they're going to be sending you emails, and it's just a bit of a nightmare. So, but it doesn't work that way if you go to your insurance company and you get a quote for the family car. And that's what I would encourage you to do. It'll work exactly the same. You will learn the coverages. You'll get to see the differences in price based on some of the things you're going to do as you get the quote for that car. And if you have an agent, I used to be a State Farm agent, so I know what I'm talking about. Let's say that your mom and dad are insured with State Farm, for example, and you decide you want to get a quote for that Lexus or that Tesla or whatever it is that you put in your plan that was going to be your dream car. Go do it. Go for it. Go to your family agent and say, I want to get a quote for this car. Tell them the year, the model, and they'll give you a quote for that car. They won't charge you. It'll take them 5 minutes. It's super easy. And you will actually have the numbers for the car insurance for that car. Now, what might be different is when you graduate and you're on your own and you're not on their policy, the price could be very different. But for now, for this assignment, you're good to go. You just get a quote from your current agent. So this is the data card. This is what I'm looking for. I want you to talk a little bit about the coverages, bodily injury protection, bodily injury. Uh, this is per person. Um, PA is aggregate. So we'll talk a little bit about those numbers, but when you get your quote, you're going to see that on the quote, and you'll have to say, I want this much coverage, or I don't want any coverage, and that's how you do an insurance quote. You just basically say, I want this, I don't want that, I want this level, and we're going to talk a little bit about those coverages. And so this car, this Honda, looks like it has $25,000 of property damage and $1,000 deductible for collision. That's what that's for, the deductible for collision. And these two checks are pretty important. I want, when you get the quote, here's a little clue. If you have a loan on your vehicle, you have to include comprehensive and collision. So we're going to talk about those coverages for a few minutes. But that's your auto. That's auto. You're also going to do home. And your home insurance is super easy. You're just going to put your home, who's the owner, how much coverage, and then when you're going to put the premium in, and you're going to save that. And when you do that, that's going to update your mortgage card, and the amount of premium that you pay for your home is going to actually get plugged into your financial plan as an expense, and it will be attached to the mortgage card that you built when you added your house to your plan. So that's what I'm going to be looking for in this week's assignment, is these two data cards. But to get there, that's really not the objective of this lesson or this week's assignment. This week's assignment is really designed and intended for you to learn about the coverages that are involved in insurance. Home and car insurance are the primary ones that are most, I wouldn't say most popular, but they're the ones that you need the most. When you own a home, you have this asset that you want to protect. If it gets damaged, you want to protect it. So I have a keynote presentation that I am going to see if I can turn on, if it will let me. Yeah, there we go. So, Insurance 101. The reason I wanted to play this screen show, its keynote, is I have a lot of cool pictures that might be more fun to look at than just this post. So that was just really insurance risk management, by the way. It's one of the 7 elements of financial planning. So if you ever decide you want to become a certified financial planner, you learn about financial planning, and you learn one of the first things you learn is there's 7 elements of financial planning, and one of them is risk management or insurance planning. So I just wanted to kind of mention that. But my job for you is to help you become just a good consumer of insurance, and we're going to do that using an auto insurance quote. So you're going to get an auto insurance quote. You're going to add that to your plan. And like I said, you can use your own car, you can use the pretend car, you can use a friend's car, you can use a family member's car. I would love to see quotes for the car that you have in your plan. That'd be fun. You're going to save that quote in a PDF. It's going to be part of your assignment. You can grab a screenshot, or you can give me the PDF, whatever's easiest for you. I do not care. I just want to know that you did it. And you're going to address these coverages. So collision, I want you to get a quote. When you get a quote, collision coverage is one of the coverages in your auto policy. And if you have a loan, you have to have collision. You also have to have comprehensive, which is what I already said. So I want you to understand what a deductible is. And I'm going to just ask in the let's see if I can go to the Zoom room. It's kind of hard to go to the Zoom room right now. Oh, there we go. Zoom room. Can you tell me what a deductible is? Do you guys have you got any idea what a deductible is? and how it works. You're going to learn about that this week. And okay, come on. I'm having a little trouble here. I don't see any comments, so I'm assuming either you're watching Netflix or maybe you don't know what a deductible is, an insurance deductible. I would think that you probably have an idea what a deductible is. I would also think that maybe you're just not wanting to share that with me right now. So if you're watching on YouTube or Facebook, please leave a comment. Tell me, what do you think a deductible is and how does it affect your car insurance or your home insurance? Either one. Honestly, I'm not too sure. Okay, well, let me just tell you. A deductible means you have an amount that you choose on your policy. It's called a deductible. And what it means is it's the amount that you are going to reserve for your own exposure. So I'm saying it terribly bad. A deductible is the amount of insurance that you don't transfer to the insurance company. So when you buy an insurance policy, you're transferring risk to them. But your deductible is the amount of exposure you have. So let's say I have my RV out there and it's insured for $100,000. I have a deductible on there of $2,500. If I total that thing, I have to pay $2,500 out of my pocket. That's a deductible. Now, I could have taken a $500 deductible, but if I would have taken a $500 deductible, I would only have to pay $500 if I totaled my RV. However, if I took a $500 deductible, then my insurance premium, instead of being $1,500 a year, it would cost me $2,200 a year. Now, I'm making those numbers up, but that's how it works. I don't know for sure. A lower deductible, though, means you pay a higher premium because a lower deductible means if you have an accident, a collision, then you, looks like I lost my screen over there. If you have a collision, then you don't have to pay as much if you have a lower deductible. So that's what a deductible is and how it works. Let me get back here. Sorry, I'm going back to my iPad. I'm learning a new tool that is a little not working at the moment perfectly. So a deductible is something you have to decide on every time you buy an insurance policy. And that's true for your home as well as your car. Now, this data card, by the way, for your home doesn't show your deductible. But it will certainly change the amount of the insurance premium. So on your home, I'll tell you a quick story about my home. I live in Galveston County, and so my insurance, I got canceled for my homeowner's insurance, not because of anything I did, but because the insurance company was basically losing so much money in the state of Texas that they went out of business. And so when that happens, you get handed off to the Texas Windstorm Insurance Association, and they will insure everybody, anybody. And so I took their package, but I took a $20,000 deductible because the cost for that windstorm insurance was very high. And I thought, well, you know what? I'll take the chance because I wanted a cheap insurance policy. So I took a big deductible. 10 minutes after I did that, actually, it was about a week after I did that, we had a little windstorm here in Texas, in Friendswood, and it blew a couple shingles off my roof. And my roof was old enough so that it wasn't considered repairable, which means it's hard to find a roofer who will repair it. So the insurance company, the Texas Windstorm Insurance Association, my new insurance provider, said, we are going to total your whole roof, which is what they did. And they gave me an estimate and said, here's how much it should cost to get a new roof. It was just barely under $20,000. So my $20,000 deductible did me no good. I had insurance, but in this particular case, the cost of repair to my roof was above my deductible. So hopefully that helps you understand how a deductible works. That's true for your cars and your home. So that's a deductible. It's one of the things you get to do to uh, kind of manage the cost of your insurance. So, before we talk about homeowners insurance, I want to talk a little bit more about car insurance. And like I said, you're going to have a lot of information in Money Study Group. You're going to have a quiz. You're going to want to just review some of that for the quiz. It's not a hard quiz. And again, I'm not trying to make you an expert on insurance. Your primary focus this week is to do an auto quote. So I do want you to be familiar with these different parts of your auto insurance. So I want to talk about, we talked about a little bit about collision and comprehensive. I want you to understand the difference between collision insurance and comprehensive insurance. So, you have a deductible for each of those, comprehensive and collision. But you're not getting the 5 extra points. I needed to delete that. Maybe you will. I will really be looking for this. If you get a quote with more than one deductible, it's hard for me to always remember to give you the extra points that I promised in this post. But I do want you to get more than one. I want you to get a quote for one deductible and another quote for a higher deductible. So I want you to know, I want you to be able to see in your quote the difference between a high deductible and a low deductible. It's just something I want you to understand. And the best way to understand these coverages is through the process of getting a quote, a proposal. And if you get a quote for a $500 deductible versus a $1,000 deductible on your car, you'll be able to see side by side the difference in cost for your collision. You can do the same thing for comprehensive, but I want to tell you now, I want to explain the difference between collision coverage and comprehensive coverage. And this is important. Again, they both have a deductible, but the deductible is not going to change. It's not going to save you as much money on comprehensive as it is on collision, especially if you're a young man. So let's talk a little bit about collision versus comprehensive. And I want to bring up an idea called exclusions. Now, an exclusion means it's not covered. So every policy has a list of exclusions, and you're going to see those in this week's study assignment. You're going to see exclusions. Just understand every coverage, every policy, and every specific coverage has exclusions, which means it's not covered. Something is not covered. And so I want to explain the difference between comprehensive and collision coverage. You have to have both of those on your auto insurance policy if you have a loan. Most people do have a loan on their car insurance. On their cars. So I want to first start by asking, what do you think the word comprehensive means? I should have a nice screen show here, but my keynote's not working right. So what's your definition of the word comprehensive? What do you think that word means? You can chat that in. You've got to know, Ava, what the word comprehensive means. You at least have to have an idea. If you're an English-speaking person, the word comprehensive should have a meaning. And I want to know, what is that meaning to you? So I'm looking and waiting and hoping and anticipating and holding my breath, looking for a little interactivity here, but I'm not seeing it. Okay, I'm not seeing anybody. Come on, Ava, are you still with me? I know you could have left for another. Where are you guys? Come on. So I'm going to jump on over to YouTube and see if anyone's leaving a comment in YouTube. No comments right now on YouTube. Okay, so here, let me tell you what it is. I've always thought it's to understand something, to understand and be able. So that's comprehend. Comprehend is a good. That's what comprehend means. But comprehensive, it generally means everything. It's broad. It's like everything. And so just if you look that word up, Google that word, you'll see that comprehensive is generally meaning everything. And so if that's true, if I'm right about the definition of that word, and I am, then I want you to think about, what does the coverage called comprehensive on your auto insurance, what does that cover? And just think about that for a minute. If the word comprehensive means everything, what does the coverage on your auto insurance cover? The comprehensive coverage. So it would cover everything. And it's not about the price, Alani. It's all of anything that could happen to that vehicle is covered. It's comprehensive. So there's another term that we use in the insurance industry called all risk of physical loss, APL. And we have that term, that insuring agreement on different types of policies, like your homeowner's insurance policy. Your homeowner's insurance policy, you may not know this, but there are lots of different policy forms and that basically say your home, the actual building, your home, the coverage A, the dwelling, is covered for all risk of physical loss. So everything's covered. So if you just keep that in mind, that comprehensive, everything is covered. But what did I say about exclusions? And by the way, that doesn't mean that because everything's covered doesn't mean that the insurance company is committing to pay $1 million for a, they're only going to pay up to the amount of the coverage. But what's covered within that coverage in comprehensive is everything. But obviously that's not going to work, right? Obviously an insurance company isn't going to cover everything, even though the coverage is called comprehensive, which basically means everything. So what is it going to cover and what is it going to not cover? And when you want to answer the question, what is it going to not cover, you go right to the list of exclusions. Every policy, every coverage in every policy has a list of exclusions. And you want to know what those exclusions are, because then you know what's not covered. So in comprehensive, what do you think is the number one item that's excluded? There's one, and I'll literally give you, I'll give you a free 50 points if you can answer the first, and you have to be in the Zoom meeting for this one, because I'm confident based on your guys' interaction with me that nobody knows this. So I'm going to give you, if you can answer the number one exclusion for comprehensive by the time I finish this paragraph and move on to the next, before I tell you the answer, if you can tell me what's the number one thing excluded in comprehensive coverage in an auto policy, I'll give you 50 points. So basically, you won't even have to do this week's assignment, because you're not going to know. I mean, just based on my interaction with you, I don't think you're going to know the answer. It's a very simple answer, and it's going to make a lot of sense. And after I tell you, you're going to go, oh, that makes total sense. Because comprehensive and collision coverages, two different coverages, the number one exclusion for comprehensive is, and we're about to run out of time for your, let me see if I can hit the drum roll. Okay, so here's the answer. It is collision. The number one exclusion under comprehensive coverage covers everything except what's excluded. And one thing that is excluded, number one on the list, is collision. So you can't just buy comprehensive coverage and not buy collision coverage. You have to buy both of them. Collision coverage is if you run into something or someone. That's collision. And comprehensive covers everything except collision. So if you're a young man, collision coverage is very expensive. It's more expensive for the young man than it is for the young woman. Does anybody have any idea why that might be? So Alani, it's before you get to damages, your answer was what's excluded. It when it comes to exclusions, they exclude types of loss. Damages are actually what happen as a result of a loss, a peril. A peril is like collision is a peril. That's a specific thing that happens that causes damages. So when it comes to exclusions, the policy doesn't really say what kind of damage is covered or not covered. At times they do. Like for example, homeowners policy and a car policy will say that rust, rot, and that kind of thing isn't covered. And that's a certain kind of damage, rust and rot. But the thing is with rust and rot, they're not sudden and accidental, so they're not covered. Nothing is intended to be covered in property and casualty insurance that isn't sudden and accidental. Sudden and accidental. You have to kind of remember that. And so that's why, you have an exclusion for rust, rot, inherent vice, even mold. So these are things that are typically excluded. But generally, they're excluding perils. So in your homeowner's policy, again, I told you your homeowner's policy covers everything. And it does, unless you have a limited form, a different type of policy that you got because you saved money and you didn't buy the good policy that covers anything that happens to your house. Same thing is true with your home insurance as it is with your comprehensive insurance. There is a list of exclusions. So let's change channels and talk about homeowners insurance for just a minute. In your homeowners insurance, I'm not going to do that. Maybe for just a minute, I'll put Mr. Cartoon Head up and talk just for fun. But on your homeowner's insurance, just like your car insurance, you have an exclusion, even though both of those coverages, comprehensive covers everything, and your homeowner's insurance is basically all risk physical loss, and yet both of them have an exclusion that says this is not covered. On the comprehensive in your car insurance, it says your collision is not covered. Everything's covered except collision. And on your homeowner's insurance policy, it says it's an all risk physical loss, meaning everything's covered except the number one exclusion is, what do you think the number one exclusion is in your homeowner's policy? We live in Houston. We have things called hurricanes. I told you about my windstorm loss, but what other peril do we have in Texas, in the coastal areas, that might not be covered under your homeowner's insurance policy? And it's not damages, it's a peril. Your home is covered for anything, but there's some exclusions. Number one exclusion in the homeowner's policy is, dun, 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 here we go, I'm going to do the drum roll again. It's another 50-point opportunity if you know what it is. If you don't, by the time the drum roll ends, I will tell you. The number one exclusion in your homeowner's policy, which covers, most policies cover all risk of physical loss, which means everything's covered unless it's excluded. The number one exclusion in a homeowner's policy is flood. So yeah, imagine having a nice house like you bought in your financial plan and not insuring it against flood. Now, if you have a loan, if you have a mortgage, you're required to carry flood insurance. But I just want you to know how the policies work. You have these coverages, but then you have exclusions. So you have an exclusion in the comprehensive coverage that says collision is not covered. So I'm going to tell you a story about comprehensive for a minute because I want you to understand how it works. And then I'm going to tell you a story about, well, actually, you know what? We're running out of time. I'm not going to tell you stories today. I'm just going to let you do a little study and encourage you that you're not going to be an expert in insurance this week. We're just touching on car insurance and home insurance. There's still long-term care insurance, disability insurance, other forms of health insurance, life insurance, a whole myriad of life insurance products out there. And so as we go through this week and you learn about insurance, you may have some questions that are very real and very important to you. And I want you to know I'll answer any questions you have. But the assignment you have this week is really not that difficult. It's just to get a car insurance quote so that you can learn the coverages. And I wish I could make you an expert in insurance, although you probably wouldn't enjoy that uh, process. There's so much minutia in insurance. One thing I do want you to know is these coverages, liability is another coverage. It's not collision, it's not comprehensive on your car insurance. There's a whole section in the policy, it's called Section 2, and it's liability. And in that liability, when you get your quote, you're going to see these three numbers. And I'm just going to tell you what these three numbers are because I want you to know. But they're, again, if you just spend a little time learning about the coverages, you will quickly learn that these three numbers mean 100, 500, 100. Now, that's a pretty good coverage level for liability insurance. You can choose lower amounts. You can also choose higher amounts. I just selected this as an example. So 100, 500, 100. The first number, 100, means $100,000 for liability. That means something you were negligent, you caused the accident, you are at fault. That's what's required for your liability insurance, whether it's homeowners or auto. That's what's required for your policy to respond. You are at fault. So that's what liability insurance is there to protect you for. So in this case, the coverage amounts 100, 500, 100 for claims that result in something that was your fault. Your policy will pay to the other person. Liability coverage does not protect you, it doesn't pay your damages. It pays damages for the other person. And so 100, 500, 100, the $100,000, that first number, is for one single person's loss. So I always like to use the story of you're driving your new Tesla and you're on your phone and you're texting and you look up and you miss the fact that a school bus just pulled out in front of you or turned in front of you, and you run into the school bus and you cause the school bus to crash. And in that crash, there are 20 students on the bus, and all of them go to the hospital. And let's just say, not to be offensive or gory, but let's say one of those students actually dies because the bus rolls over, it runs into a telephone pole. It's a terrible accident, and there's a Mack truck involved, and that whole accident was caused by you. And this is your coverage. And so what is it going to pay? It's not going to pay any more than $100,000 for any one person in that accident. 100,000. So if that one student who died, your policy, your insurance company is going to quickly write a check to that family for $100,000. I promise you that's what they're going to do. They're not going to wait until you get sued and then settle in court. If someone died in an accident that was your fault, your insurance company is going to write that check as quickly as they can. The next number, 500,000, that's still bodily injury. The first two numbers are bodily injury. That's damages, medical bills, including pain and suffering, liability for personal injury, the first two numbers. The second number, though, is different than 100, it's 500. And that means that your policy will pay up to $500,000 total for everyone who's injured in that accident that was caused by you. So if there were, I think I said 20 students, if we said every one of those students had a $50,000 hospital bill, you'd immediately know that that's $1 million. Plus, you had the one that died, so that's $1.1 million. You can do the math in a lot of ways, but bottom line is that's a lot more than you have coverage for. Your policy is going to max out at $500,000. So just so you know how that works, that illustration is simply to help you understand how it works. The first number is for one person. The second number is for as many people as are involved in the loss. Now, the last number is very different. It's not for bodily injury, it's for property damage. So we said that you got in an accident, it was your fault. It involved a school bus, and it was Kamala Harris's favorite kind of school bus. It was an electric school bus, very, very expensive, very big battery, very, very expensive school bus that you got in an accident with, and it was your fault, and the bus rolled over, and there was a Mack truck involved. The Mack truck was damaged as well. The school bus was totaled, and there was a telephone pole involved, and the telephone pole came down on the bus. And when it came down on the bus, the wire that went to the house on the corner actually sparked a lot and created a fire in the house, and the house burnt down. So we got a burnt down house, we got a totaled electric school bus, we have a damaged Mack truck, and we have a telephone pole and the wires attached to it that the city is going to have to replace. So if you add all that up, it's a lot. It's probably, not probably, it's definitely going to go over $100,000. But that's the whole point of the illustration, is just to help you understand why when you get your quote, you have to kind of think about what kind of coverage do you want. Because what's going to happen in any claim, if you have, let's say you have the minimum, and that's one of the questions on the quiz, is what is the minimum amount of liability insurance that you have to have in the state of Texas? What's the minimum? And this is not the minimum. That's a good amount of coverage. So that's the liability coverage. I want you to understand how that works. Listen, we're out of time. I'll pick up next week and tell a few stories about insurance. But again, I want you just to know that your insurance assignment, it's not difficult. I promise you. There's so much information. It may sound difficult. I hope your eyes aren't glazing over. Insurance is a very important part of your personal financial plan, because you're going to spend so much money on insurance in your lifetime. You really need to understand how coverages work, how deductibles work, how exclusions work, because there's a lot of things you can do to manage risk and reduce the cost of your insurance. So I hope that's been somewhat helpful. Again, if you have questions, I'm happy to answer any questions you have about insurance, any specific questions you have about life insurance or car insurance or home insurance. And in this assignment, you'll find that you're going to learn a lot, and it's not going to be difficult. And I'll see you next week. If you have any questions in the Zoom room, I'm going to go ahead and close out the live stream, and I'll be right back. Okay, if you're watching on YouTube or Facebook, appreciate you leaving a comment. If you're a student in the course, you should definitely leave a comment. And don't forget this week's class collaboration. I'll tell it again. I'll mention what it is again. We're having this kind of ongoing conversation the last few weeks. This semester it's new. We have the secret Zoom meeting class collaboration, and it's just basically designed to make sure that students who are in the course are watching the Zoom meeting, because it is required. You do not have to watch it while it's going on at 10 a.m. on Tuesday, but it is live streamed. It's saved to a playlist, and the question, the collaboration for this week is really, is there a better way for me to do that for you? Is it confusing? Is it clear? Is it easy? Is it complicated? I mean, it seems to me like it's, for most students, it seems like it's working just fine, but we have a handful of students who, for some reason, don't seem to either know where the videos are or they're not watching them. So that's the class collaboration for this week. Tell me what I can do to make it better for you. Leave a comment. Let me know you're watching, listening if you're in the course. But that's the conversation I'm hoping you'll have with me. Grab a screenshot, include that in your assignment this week so that you don't get the 10-point deduction for not watching the Zoom meeting. It's too easy. So there it is. I'm going to log off now, and then I'm going to go